Okay, good day everyone. Our discussion for today will be the last part for financial statement, interpretation, and analysis, particularly the topic on ratio analysis. Okay, ratios are useful in showing the relationship among financial statement data and also can be useful in comparing one company with another or analyzing the same company over time. Ratios often are classified into different categories. Okay, so the ratios that we are going to compute under ratio analysis for financial statement interpretation analysis, we are going to consider what are the relationship of a particular data from a balance sheet to a data of an income statement. And also, the ratio that we are going to compute can be useful in comparing the company's strengths to other companies, considering that these companies are in the same industry. And these ratio analysis na topic are divided into different categories that we are going to discuss later on. But before we proceed to the different categories, I want you to know the basic rules that we need to follow on ratio analysis. Okay? Number one, when calculating the ratio using balance sheet numbers, only the numerator, when calculating a ratio using balance sheet numbers only, the numerator and denominator should be from the same balance sheet date. The same are true for ratios using only income statement numbers. Ibig sabihin po nun, once we compute for a particular ratio of a, if the denominator and numerator are coming from the balance sheet data, we need to make sure that those data came from the same date or from the same period. Same with the income statement data, except if growth ratio is calculated. If we are going to talk about no growth ratio, sometimes we are going to use different periods kasi we are talking about here growth. Okay? The second rule on ratio calculation is that if an income statement account and a balance sheet account are both used to calculate a ratio, ibig sabihin, there is a possibility that the income statement account or this income statement number is the numerator or the denominator. Same with the balance sheet, possible na maging denominator or numerator and the calculation of the ratio. The balance sheet account should be expressed as an average for the time period represented by the income statement account. So, if balance sheet po gagamitin on the calculation of ratio, wherein that ratio is composed of an income statement account and a balance sheet account, the balance sheet figure shall be expressed at its average. Paano po natin i-compute yung average balance ng balance sheet account? That is very simple. You just need to add the beginning and the ending balance of that particular account, then divide it by 2. If there is no beginning balance provided, all you need to do is to presume or assume that the ending balance is the average balance. The third rule in ratio calculation is that if the beginning balance of a balance sheet account is not available, the ending balance is normally used to represent the average balance of the account. Yun na po yung sinabi ko kanina, that if ever the beginning balance of the balance sheet account is not provided or not available, we will assume that the ending balance is the average balance of the said account. And then take note, once we compute the average balance, that is the beginning plus the ending balance divided by 2. The fourth rule is that if sales and or purchases are given without making distinctions, ibig sabihin, the sales and the purchases account, hindi binigay whether that sales is in a form of cash or in a form of credit. Same with purchases. If the purchases are in a form of cash or in a form of credit, hindi po binigay, or without making distinction as to whether made in cash or on credit, the assumptions are made depending on the ratio to be calculated. If the ratio to be calculated is a turnover ratio, take note ha, if the ratio to be calculated is a turnover ratio, and then the sales and purchases did not give any distinction as to whether it is made in cash or on credit. Well, the sales and purchases are generally assumed to be on credit lahat. If we are going to compute naman for the cash flow ratio, the sales and purchases are assumed to be on cash if that sales and purchases are not given without any distinctions as to whether it is made in cash or on credit. Take note of that rule. The fifth rule is that generally the number of days in a month or year is not a critical to the analysis. So, that's correct, no? Hindi naman po critical masyado yung days or um, days in a month or days in a year. However, for the purpose of computation, no, okay, a year may have 360 days, or 52 weeks and 12 months. Alternatively, a year may be comprised of 365 calendar days or 300 working days or any appropriate number of days. But normally, no, yung ginagamit po in terms of days, okay, particularly on the number of working days, is yung 365 days or the 360 days. If the problem is silent, ibig sabihin if the problem did not provide the number of days in a year, the number of days that we need to use is yung 360 days. Okay? So, if the problem is not silent naman, whatever number of days, calendar days being provided in the problem, we need to follow that. Okay, so we need to, as at this moment, we are now going to proceed to the different categories of ratios. Actually, there are five, but for the purpose na sa level ng mga ABM students, we will discuss only four and then limited to number of different ratio. First, we have the liquidity ratio. Okay, the liquidity ratio, its guiding question is, will the firm be able to pay off its debts as they come due and thus remain a viable organization? That is the question, okay, or the guiding question, what is the guiding question as to determine what is the purpose of the liquidity ratios? Will the firm be able to pay off its debts as they come due and thus remain in viable organization? Okay, the liquidity I mean is a company's ability to meet its maturing short-term obligations. Liquidity is very essential to conducting business activity, and analyzing corporate liquidity is especially important to creditors because if the liquidity ratios provided that the company is highly liquid, ibig sabihin po nun that the company can able to meet or to pay off its debts as they come due, and the company will remain a viable organization. If a company has a poor liquidity position, it may have a poor credit risk, and perhaps it will have unable to make timely interest and principal payments. So take note, pag hindi liquid ang company, posibleng walang magpautang. If not naman, mayroong magpautang, the company cannot able to pay its interest on a timely basis and even its principal payments. Okay, most ratios under liquidity, we have only two, the current ratio and the quick ratio. Okay, the current ratio is very simple to compute. That is dividing current assets to current liabilities, and its rationale is or its purpose is it is a measure of adequacy of working capital. It is the primary test of solvency to meet current obligations, okay, from the current assets. Okay, so once we compute, no, if if the current ratio is equal to 1, it means that the current liabilities and the current assets are identical to each other. Ibig sabihin, the figure of the current asset and the current liabilities has equal figures. If the current assets is higher than the current liabilities, obviously the current ratio will be greater than 1. And its effect will be this. Now, if the current ratio is greater than 1, we can easily assume that the company is highly liquid because it can able to pay its debts or its liabilities kasi there is enough current asset to pay the current liabilities. If it is less than 1, it means mas mataas po ang current liabilities over the current assets. In effect, pag maningil lahat ng current liabilities na meron ka, kukulangin ang current assets na meron ka. On the quick ratio naman, this is another liquidity ratio. It is computed as the quick assets over current liabilities. Okay, what are the quick assets? Okay, take note, quick assets are cash, marketable securities, and current receivables. Pag sinabi pong quick assets, these are the sum or the total. This is the sum of cash, marketable securities, and current receivables, or the accounts receivable that is current, and notes receivable that are current. What the purpose of quick ratio is to measure the number of times that the current liabilities could be paid with the available cash and near cash assets. Itong quick ratio, same din po siya sa current ratio. Pero yung pagkakaiba lang because we are only considering the quick assets, the available cash or the soon to be cash, yung cash, the marketable securities, and the current receivables. Mas um, mas magandang basis po ang quick ratio in determining the liquidity of the company because the basis of the current liabilities, the basis of the company to pay its current liabilities are those assets that can be easily converted into cash or the cash itself. Okay? So that's it. Yun po yung mga liquidity ratios na common na dapat nating intindihin. Okay. Let's proceed to the working capital activity ratios or the activity ratios. The guiding question on the activity ratio or to know the purpose of the activity ratio is, does the amount of each type of asset seem reasonable, too high, or too low in view of current and projected sales? Okay, activity ratios are used to determine how quickly various accounts are converted into sales or cash. So the activity ratio will provide us information that a particular asset can be converted into cash easily. Okay, or the sales can be converted into cash easily. We have certain ratios that we need to understand. Number one, we have the receivable turnover. This is computed by dividing the net credit sales. Once we say net credit sales, net credit sales is the sales minus sales returns and allowances less sales discounts over the average receivable. Sinabi ko na po kanina, once we compute for the average is computed by adding the beginning balance of the receivable. In this case, kasi we are talking about receivable turnover, and the ending balance of the receivable and divided it by 2. If no beginning balance, the ending balance is assumed to be the average balance. So what is the purpose of the receivable turnover? The receivable turnover, it is the time required. Time required to complete one collection cycle from the time receivables are recorded and then collected to the time new receivables are recorded again. So ano po ba ibig sabihin ng receivable turnover? Ito, once we compute the receivable turnover, this the number of times, ilang beses po sa isang taon nagkakaroon po ng utang ang company, nagkakaroon po ng receivable, hindi po totally utang ha, receivable yung isang company. For example, if you computed, once you compute the receivable turnover and then the quotient na lumabas is 3 times, ibig sabihin at an average, um, posible the company is nagpapautang 3 times a year lang. 3 times a year. At at average. Okay? That is, yun po yung ibig sabihin nun. Once you record the receivable, okay, um, from first day of the year up to the last day, tatlong beses lang po tayo nagpautang. Yun po yung ibig sabihin ng receivable turnover. And the purpose of the receivable turnover is also no, helpful on determining the average age of receivable. The average age of receivable is computed the number of working days. Normally, we will use the 360 days. If if not, we will use the 365 days. And then we divide 360 or 365 days depending on the problem to the receivable turnover that we computed, so that we can determine, okay, yung average age of receivable, which will indicate the average number of days during which the company must wait before receivables are collected. If the okay, no, i-connect po natin yung receivable turnover at average age of receivables. If the receivable turnover refers to the number of times that a receivable can be recorded, no, throughout a period, the average age of receivable will determine the number of days that a receivable from the time you record it, no, makokolekt. So, ibig sabihin, once you record, ilang days po posible nating makolekt yung receivable. Okay, that is the purpose of average age of receivable. For example, no, yung kinumpute ko yung receivable turnover, lumabas 3 times, and then, okay, so if I'm going to use 360 days, okay, you need to divide 360 days over 3. Okay, the quotient of that would be the number of days that the receivable will remain outstanding. Ibig sabihin, sa mga, yun, yung days na yun, that would be the days na hindi mo pa makokolek yung receivable or nakatenga yung receivable. That is the purpose of average age of receivables. Another activity ratio, ito, yung inventory turnover at average age of inventory. Same with the receivable turnover and the average age of receivable, same din po yung computation natin sa kanya. However, we are now using the inventory account. For the inventory turnover, we will use the cost of goods sold over the average inventory, while for the average age of inventory, the number of working days over the inventory turnover. Okay, the inventory turnover, it measures the number of times that the inventory is replaced during the period. That is the number of times we repurchase or we purchase in a year, no? Well, for an inventory. Then the average age of inventory, it indicates the number of days during which the company must wait before the inventories are sold. Ibig sabihin, the average age of inventory, once you acquire it, how many days you will wait before it can be disposed, no, for resale. That is the average age of inventory. The normal operating cycle is connected with the first four formula na illustrate ko, because the normal operating cycle is the sum of average age of receivables and the average age of inventory. Ano po ba ang normal operating cycle? The normal operating cycle is the period of time required to convert cash into raw materials into inventory, finished good inventory into sales, and accounts receivable into cash. In short, the normal operating cycle is from inventory to sale to um, collection. That is the number of days when uh, when can be inventory be converted again into cash. That is, yun po yung ibig sabihin, from cash to cash. You have your cash and acquisition of the inventory, then the number of days you will wait for to sell that inventory, possible in a receivable, no? And then the number of days the receivable can be collected into cash. That is the normal operating cycle. Okay, parang from cash to cash. Okay, so that's the normal operating cycle. The accounts payable turnover naman, same with the turnover and the average age of inventory. Pareho din po yung ibig sabihin nun. The accounts payable turnover, we compute that using the net credit purchases. Take note, the net credit purchases, that is the purchase on credit, less the purchase returns and allowances on credit, and the purchase discounts. Okay? Over the average accounts payable. Same din po sa average na receivable and inventory. The average is the sum of the beginning and the ending balance of the payable and divided by 2. And if ever the beginning balance is not provided, the ending balance is presumed to be the average balance. It is the time required to complete one payment cycle from the time trade payables are recorded and then paid to the time new trade payables are recorded. Again, ibig sabihin lang po nun that the accounts payable turnover, it is the number of times, okay, na umuutang po tayo in a year. Pero para magkaroon po ng kabuluhan yung turnover, accounts payable turnover, we need to compute the average age of accounts payable. It is the number of working days over the accounts payable turnover. It indicates the length of time during which payable remain unpaid. Ibig sabihin, if we're going to compute for the average accounts payable, that is the number of days na pwede po na posible the company is not paying its liabilities, particularly on account ng mga liabilities. Okay? So those are the activity ratios, most common activity ratios that we need to um, understand. Okay? The second to the last group of ratio that I'm going to discuss is yung mga solvency ratio. Actually, pareho lang siya sa liquidity ratio. However, yung liquidity ratio kasi is most on short-term liabilities. Yung solvency ratios, these are the company's ability to meet or to pay its long-term obligation. Take note, the solvency ratio and the liquidity ratio are pertaining to the payment of liabilities. Kaso, yung liquidity ratio, we are pertaining to the ability of the company to pay its short-term or current obligations. While on solvency ratio, the company's ability to meet its long-term obligation as they become due. An analysis of solvency concentrates on the long-term financial and operating structure of the business. Okay, so for the purpose of discussion lang, under accountancy, business, and management students, there are many solvency ratio, but at your level, we will only discuss three ratios. We have the debt to equity ratios, the debt ratio, and the equity ratio. The debt to equity ratio is simply dividing the total liabilities, regardless to whether it is current or non-current, over the total equity. So the purpose of the debt to equity ratio, this refers to the proportion of asset provided by creditors compared to that provided by the owners. Yung proportion lang yan ng assets, kung magkano po yung binigay natin from the total assets, yung galing sa liability, and then ilan naman yung galing sa sariling pocket ng owners. The debt ratio naman refers to the proportion of total assets provided the creditors. Ibig sabihin, using the debt ratio, we can easily identify, no, from the total assets that the company has, okay, okay, ilan dyan ang inutang. Okay, so for example, if the total liabilities is 300,000, then the total asset is 1 million. So 300,000 divided by 1 million, we can say that 30% of the total assets uh, galing sa utang, okay, from liabilities. While the equity ratio naman is the difference, no, of 100, the difference of deducting the debt ratio to 100%. That is simply the equity ratio. Or in other way around, the equity ratio is the total equity the company have and then divided the total asset. That is the ratio that refers to the proportion of total assets provided by owners. Okay? So, yun po yung mga solvency ratios na dapat natin intindihin, okay, on understanding on ratio analysis. The last category that we need to discuss is on about profitability ratio, that under your level, I prepared only 4 ratios for you to understand. Profitability ratios measure the company's success or failure in earning profit. Recall that profit exists when revenues exceeds expenses. And then, under this category, we have 4 profitability ratio. We have the return on sales or the ROS. We have the return on assets or the ROA. We have the return on equity or the ROE and the operating profit margin. On return on sales, to compute the return on sales, we need to get muna the net income of the company, then divide it to the net sales. Okay? Because this return on sales, this determines the portion of sales that went into the company's earnings. Ibig sabihin, from the total net sales, ilan porsyento yung net income from that net sales. Okay, that is the return on sales. For return on assets naman, income over the average asset. O, nandiyan na naman po yung word na average. Again, take note, once we compute the average, we consider the beginning and the ending balance, then divide it by 2. If the beginning balance is not provided, we will assume that the ending balance is the average balance. The return on asset, okay, refers to the efficiency with which assets are used to operate the business. Ibig sabihin, if the return on asset is quite higher, no, okay, it means that the company have effectively and efficiently used its operating assets to earn too much profit. That's the purpose of return on assets. On return on equity naman, it is the net income over the average equity, which purpose is to measure the amount earned on the owner's investment. Ibig sabihin, magkano kaya sa bawat investment ang pwedeng maibalik sa owner's investment. That is the purpose of return on equity. The higher the return on equity, ibig sabihin, the investment of the owner, mas malaki yung return sa kanya. And if ever the return on equity is very high, we can we can makakaaghat po tayo nung mga bagong investors because it has a great return on equity. The operating profit margin, very simple. This is pertaining to the gross profit. So, alam naman po natin that the gross profit is the sales, the net sales minus CGS, that's the gross profit or the operating profit. Okay? Pero sometimes we can see that the operating profit is also after deducting any expenses, while the net income is after deducting interest and taxes. Ito yung mga operating profit, gross profit minus the operating expenses, then divide it by net sales. Okay? So, the operating profit over net sales or the operating profit margin simply measures the profit generated after consideration of operating cost. If the operating profit margin is positive, it means that, okay, maganda yung operation natin, okay, of the company. So, those are the ratios that I want you to learn for this week, okay, so that tapos na po tayo on financial statement, interpretation, and analysis na topic. Okay, so that's it for today. Thank you and God bless everyone. Keep safe.